and joining us on the show now is Surendra Mehta. He's secretary at the Indian Bullion and Jewellers Association. Mr. Mehta, hi. Couple of headlines really coming in from gold. One is the prices itself, which are trading at a 6-month highs at almost $2,015 an ounce. And let's start with that. What's your sense on this one? Because markets are now factoring in or pricing in the possibility of interest rate cuts as early as the first quarter end.
See, Manisha, in my opinion, for the gold to rise again, there has to be a reason. The two major reasons for the gold prices, which have shot up from $1,810 to $2,018, were Israel-Palestine war and the cut in the Fed interest rate. Okay, now Israel-Palestine war is already over. The interest rate cut has already been announced, and there is nothing new to it. As far as the reduction in the interest rate goes, I think that is still far away. So in my opinion, this looks to be a big trap, and I personally feel that gold can still go higher up to $2,026 to $2,040, but I am seeing a very big downfall in dollar terms, which may be about $75 to $90. So maybe to the extent of $19-30, I am looking at gold prices once again. So it's a bit risky. The markets, I would rather say it's a trap mode, and one should be very careful because the prices can move higher to the extent of $20-25, but can move lower to the extent of 75 to 90.
All right. So a $20 up move from here, but an $80 of a decline is what the charts show right now. The other big thing, Mr. Mehta, clearly is about the sovereign gold bonds. The first tranche that was announced in November 2015 is now ready for redemption on 30th of November, exactly 8 years post that. And we're looking at very, very strong returns for the investors who actually put in money at that time.
Yeah, absolutely. Those who have put 2,684 rupees per gram are now getting 6,132 rupees, which is about 128.46% return in 8 years. Apart from this, every investor have also got 2.75% interest per annum. That totals to about 22%. So about 150% return in 8 years, which is about 18.5% annually. If you calculate it on the compounded annual growth rate, it comes to almost 11%. So this is the return which normally a gold will never give. And I think this sovereign gold bond has actually enhanced the confidence of the investors, and that is why we are looking at various other investing community who used to invest in bonds and securities and equities are now coming to invest in gold market.
Oh, well, absolutely. You know, a lot of people who did not touch gold in sense of financial advisors are now talking about SGBs right now. But are you surprised? Because when we started in 2015 and even until 2019 and 20, we saw many tranches being announced in a matter of a year. For this year, it's just been a couple of them, and we didn't see one coming in Dhanteras, Diwali, which usually is the case.
Yeah, we are also a bit surprised, and a lot of investors have been calling us because IBJA prices are being used for that. But I'm very hopeful that once this first tranche is redeemed, the new tranche will be announced because it's an investor's demand. One should not look at returns like what earlier it has given, but one can definitely look at return of about 7 to 8% per annum. So I think everyone is waiting, including me, for this sovereign gold.
Oh, absolutely. Also, Mr. Mehta, what is your sense with the kind of redemptions that we've seen in the past many years? I mean, the first one was launched in 2015, but you can redeem after 5 years. Have you seen a lot of people take that money back, or do you think most of the people are awaiting full maturity?
No, I have very interesting data for you for that case. The total sovereign gold bond collection till now by the government is 120 tons, out of which the premature redemption is only 1.55 tons. So this clearly shows the confidence of the investing community in sovereign gold bond. It is guaranteed by the government. There is mark-to-market redemption. There is an interest of about 2.5% per annum. then there is no capital gain tax. So there is a full bundle, exciting bundle package to invest in the gold bond. And that is why people have not been redeeming it, because if you do a premature redemption, you lose your capital gain exemption. So everyone is waiting for the redemption on maturity.
Oh, absolutely. And the gold prices are in the positive for this year as well. So anybody who bought even last year are sitting on a hefty amount. And as said, 2.5% is anyway an interest rate that you earn on whatever you have invested. Well, that's about gold. But a quick word on silver as well, because we've seen stronger gains onto this one. For the month of October, November until now is 7% up in case of silver. Are you looking at more gains? Because we're above 24 now. I mean, that has been a resistance for some time.
Well, I personally think that for the gold to go beyond $25.10 is going to be a bit tricky. There would be a resistance at that level. I still feel that gold prices will reverse back, and then that reversal can be to the extent of $23.26. So, I'm sorry, silver prices can go back up to $23.26. So, in my opinion, again, the silver will perform like gold only. One step ahead, but 3 steps backward. So I think one needs to be very careful in investing in gold and silver at this stage.
All right.
1 step ahead and 3 steps backward. Well, from the last 2 years data that we have, there has not been many steps backward, Manisha, as you've been telling us. Let's see how that pans out. Thanks a lot, Mr. Mehta and Manisha, for joining in. That we slip into a short break. Come back, get you more on the markets.